There's been a lot of talk about the optimism that brought us here. And if you want a sense of that market optimism, I want you to go to your Bloomberg terminal and take a look at Bank of America's Global Financial Stress Indicator. It measures risk, hedging demand, investor flows, and it's been sliding toward the lowest levels in about 4 years. And that suggests that sentiment is nothing if not euphoric. Stock traders still flocking to bullish options. You have an index of U.S. high-yield bonds at a record high. And, of course, you had Bitcoin, which started the year below 40,000 and closing out the year potentially above 100,000. The euphoria is drawing a lot of parallels to 1996, and that brings us to this date in history. That was the day when Fed Chair Alan Greenspan, back in 1996, about 3,300 words into a now infamous 4,300-word speech, asked the question as to whether there was an irrational exuberance in financial markets that might push the Fed to take the punch bowl away.
But we should not underestimate or become complacent about the complexity of the interactions of asset markets and the economy.
Now, to be fair, Greenspan's rhetorical question was much more nuanced, but as financial markets tend to do, they seized only on those two words, irrational exuberance, a phrase Greenspan years later would claim he coined while sitting in his bathtub. So what did irrational exuberance look like back then in 1996? Well, the NASDAQ by late 1996 had almost doubled in less than 2 years. The S&P had rallied 60% during that time, trading at what seemed like an eye-popping 18 times projected earnings. How does that compare to 2024? Well, you have a NASDAQ that has almost doubled in less than 2 years, an S&P that has rallied 60% over that time, and now trading at what seems like an eye-popping 25 times projected earnings. But there is a lesson in there to be had from a quote that's even more famous than Greenspan's. It was a prophetic statement for 1996, made, well, decades earlier, because while Greenspan's speech led to a market decline, the sell-off only lasted just a few days before the Dow and S&P resumed their march higher, that with the exception of a few bumps and bruises during the 1997 Asian financial crisis, would extend the bull market all the way until the year 2000. Now today, depending on how you measure it, the current bull market has either been underway since late 2022 or since early 2024. But regardless of the official start, the recent run-up in stock prices has been phenomenal. And despite all current evidence that says the rally should fade, historical evidence suggests it may have just begun.